The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everybody, and welcome to Policy in Practice's webinar. Our latest webinar this morning is titled Changing Your Council Tax Support Scheme. What are other people doing? And we're delighted to have so many of you here on the session this morning. Thank you very much for joining us. I'm just going to get started as we work away. Just to get us underway, I'm going to do some housekeeping. For those of you who've been on our webinars before, you'll be familiar with this, so I'll be nice and quick. But essentially, I'd just like to do an audio check with you, please, just to check that you can hear me okay. So please do raise your digital hand in the panel on the right-hand side. And while you're there, if I could point you to the area where you can ask questions as well. And please do ask questions as they come to you throughout the webinar, because there'll be a chance for you to put them to our speakers during the session. We'll have 2 polls and a survey at the end. So please do take just 1 minute to complete that survey. We'd really do appreciate your feedback. Also, we've got some downloads available in the right-hand side in the same panel where you're putting your hands up. You can see that there are a couple of handouts there, just some flyers about a couple of the services we're talking about today. And we aim to have you on your way by 11:30 at the latest. Brilliant, thank you very much. I think that people have their hands up, so that's fantastic. Thank you very much. I'm delighted that you can hear us. So a little bit first up about Policy in Practice, for those of you who may be new to us and haven't heard about us before. Just very briefly, we exist to make the welfare system simple to understand, so people can make the decisions that are right for them. We believe that the welfare system can work better. We help people towards financial independence, and we're a policy-led software and analytics business. And as I say, we exist to make the welfare system simple to understand and navigate. We've got 3 main services that we use, as well as our policy work that you might be familiar with. You may have just seen us in the Observer this weekend. We have the data analytics service, which allows you to look at your data over time. We have our award-winning benefit and budgeting calculator.
Hi, Janet.
Hello, Zoe.
Janet, I'm really sorry. I'm just seeing the holding screen at the moment.
Thank you, Zoe. Let me double check that I'm doing that correctly. 2 seconds. Right. So if you could let me know.
Much better. Yes, I'm seeing the screen.
Thank you so much. I was cantering away and not having the right screen on. Thank you, Zoe. Apologies, everybody. As you can see here on the screen, this is the slide that I was talking through at pace. Big apologies for that. It doesn't matter how many of these webinars you do, every day is a learning day. So here we are, back on track. So I talked there a little bit about our data analytics survey, about our calculator, but actually today what we're talking about is our data modelling services, our council tax support scheme modelling, which is what we're here to talk about today. So that leads me very nicely on to introduce my speakers. And we are delighted to have a guest speaker here today. Before I do that, I'll introduce my... Clive, are you there? This is Clive Jones from Luton Borough Council. Are you there, Clive?
Very well. Yes, I haven't managed to do 1 out of 4 questions with the work you kindly done. Okay. So
hi, Clive, are you there? Can you hear us? I think Clive is on the call, and I will just double check whether Clive can join us. But while I do that, we have Zoe Charlesworth and Juan Alvarez Vilanova from Policy in Practice. Zoe, would you like to say hello?
Hello, everybody.
Hi, and Juan, would you like to say hello?
Hi, everybody.
Lovely. Hello there. And Clive, can you join us? Can you say hello? Okay, we're going to have to come back to Clive. I think hopefully Clive will be able to join us shortly. Okay. Clive, I know spoke at last week's IRRV event. If anybody was at the annual conference last week, Clive was there and presented on this very subject, council tax support scheme. So we're delighted to get him speaking today, and we only have him for a short time because he has to go off to a meeting. So I do hope I can get the audio working so that Clive can join us. But that notwithstanding, while I do that, try and get Clive on audio sorted, let me move over to Zoe, who's going to talk a little bit more about and introduce today's session.
Hi everybody. Yes, as Janet said, so we're going to concentrate today on council tax support scheme and the national and local drivers to scheme change. Many of you will be aware of the work we do in policy and practice. We've modelled hundreds of schemes, literally hundreds. And I think that before we start today and look into those national and local drivers, and my colleague Juan later will be looking at some actual individual. Hi, sorry, bit of a technical hitch there. Yes, so I was just saying that my colleague Juan will shortly be going through some of the actual impact of some of the schemes we've modelled. But I think that, and Clive will be looking at where the national and local impacts have led Luton. But before we actually get to that, I just want to do a quick background of where we are at the moment. Most of you will be aware that after council tax was localised, most local authorities, I think there's about, for our data, there's still about 50 left in the country that are still stuck with the default scheme. But most local authorities did make changes or a combination of changes. And these changes were basically around tweaks to the default scheme with the aim of making administrative savings, but also to simplify certain aspects of the scheme. And if we look at the changes from 13-14 to 17-18, we can see really there hasn't been an awful lot of change. All the things that we would expect are in there, that changing the minimum award, having band caps, savings limits, etc. And you'll all recognise this. Things have been much the same since the beginning of the localisation of council tax. So if we can move on to the next slide, Janet. Now, there's something very remarkable has been happening recently, that we've moved from having all those little scheme tweaks to a quite remarkable shift. If you can have a look at 17-18 here, we can see that policy in practice was mostly modelling amendments to the default scheme. And that's because a main driver for change was cost savings. If we look at 18-19, this is almost reversed. We're now seeing a change where almost 80% of the schemes we're being asked to model are income banded or discount schemes. And obviously, there's some very important both national and local drivers that have caused a shift within 1 year. And we are modelling, as I said, about 100 schemes a year. So this is significant, and we are actually capturing a major trend here. We're going to look at all the drivers that have caused this in much greater detail later on. But first of all, I want to pass over to Clive, because Clive is going to explain how those national and local drivers have impacted scheme decision making in Luton.
Great. Zoe, thank you. Clive, can you hear us? Poor Clive, I think he's talking to the ether and is not managing to get his audio sorted. I think, Zoe, while we get Clive sorted with the audio, can we skip forward a couple of slides and come back to and pick up on some of your slides, Zoe, that we were going to talk through afterwards, if that's okay. And we will come back to Clive when we get his audio sorted. Apologies, everybody.
Yeah, no problems at all, Janet. So obviously, if you see that big shift we've seen from 17-18 to the schemes we're modelling ready for 18-19. And obviously, the main driver, as you'll all be aware, the main driver behind this is universal credit. And And the reason that this is informing scheme design to such a large extent that the whole trend of what's being modelled is different, is that there's an understanding, obviously, that residents are going to need to reassess income as they migrate over to universal credit. And obviously, if you're looking at whole household income, council tax support is a important part of that. And so it makes logical sense to be looking at scheme design as universal credit comes in. Local authorities can also do a partial introduction of a new scheme. So they can do one scheme for people migrating to universal credit and another for those that are staying on legacy benefits. Depending on the outlook of the local authority, we're finding local authorities are either wanting ones that will support people who are adversely affected by universal credit, and to go alongside this, a lot of local authorities are looking at impacts on the households in their area as a whole to inform where their council tax support should sit. Others are looking to get schemes in that go along with the whole objective of universal credit, particularly around work incentives. There is a real opportunity with universal credit for local authorities to use the universal credit assessment of income in the assessment of council tax support. And this means, of course, that the local authority can remove themselves entirely from the assessment process. There are issues around people with nil income, how those are taken into account. Obviously, there will be various issues around the edge that will have to be incorporated into any scheme. But in general, if the UC award notice is used as assessment of income, then there is no need. You can really cut down on administration. Obviously, there are issues around backdating there that local authorities would have to put into scheme design. But the biggest driver is the realisation of the cost of admin against the cost of subsidy once housing benefit is removed. At the moment, the additional cost of assessing a council tax support scheme is negligible once you've had to put in all the data for housing benefit, and the majority of cases dealt with by any local authority are the dual cases. So once you remove housing benefit, you've then got council tax standing alone, and the cost ends up being very high, and the reassessments under RTI. But obviously that can be dealt with under keeping the default scheme, but I think local authorities are trying to make a radical change to just absolutely mitigate against that. Shall we move to the next one, Janet? But in order to understand the impact of universal credit on council tax support, we have to look at universal credit as a national picture and how it's affecting household income. There's been an awful lot in the paper the last couple of weeks about this as people try to inform the autumn budget. And you might have seen here and there, a lot of the papers were quoting figures from policy and practice. We've undertaken quite a bit of analysis to see who will be better and worse off under universal credit, and this will be published following the autumn budget so that we can take into account anything that comes from that. But just to give you a flavour, we've got 2.8 million households would receive less support, and the amount they're losing is £52 a week. 2 million will be better off, gaining £26 a week, and just over 2.2 million will receive similar levels. And obviously, these sort of impacts, and they're big impacts on household income, should feed into any sort of support scheme, in that to be cutting support to specific households who are also in those 2.8 million who are going to lose support may mean that you end up having to create greater cost to the local authority further down the line in collection and enforcement. So if we look at the people who are losing support, mostly people with a disability. That's people who receive PIP and DLA, as we know the premiums go. The self-employed. This third group is interesting to local authorities. It's working homeowners in receipt of tax credits. Now, this is a group that is outside your SHEBI, outside your CTR data. So you probably won't have visibility over this group. So although an awful lot of people are losing as they move over to universal credit, a very high proportion of these are not people you need to consider when you're looking at your council tax support scheme, because they're not people who are also getting council tax support. But some employed groups are, like lone parents and families with more than 2 children. You might want to consider that, the impacts on those sort of households, when you start designing your scheme. Happy to move on, Janet. The other big driver, of course, and the big effect of universal credit is on council tax support admin, which we touched on. There is going to be reassessment under universal credit, and we did some data analysis around this, and we found it was practically double. And I think this, since we did this data analysis, our conversations with local authorities show that to be about right. And the ups and downs of universal credit, if you're using that as a basis for income, are definitely going to mean you're going to be doing more reassessments. And obviously that's happening at a time when the cross subsidy from housing benefit administration is reduced. You've got much more of the cost is for CTRS standalone cases for people under universal credit. Some costings we've done on this indicate that the admin costs may be up to 25% of total scheme costs once CTR is standalone. And this is obviously really exercising minds, and I think that is the main reason we've got this big swap around between types of cases, types of scheme design that people are looking at. Okay, Janet, if we can move on. So if you keep the default scheme under universal credit, let's just have a look at the impact of universal credit on the default scheme. And most people will still be using some type of the default scheme. You'll probably know the assessment of how this is assessed, but those who are just coming onto universal credit, it might be worth going over. It's similar to the current scheme, but the UC maximum replaces the applicable amount. And the income is the universal credit received plus other income, and there isn't an earnings disregard. And actually, if like me, when you first read these, saw no earnings disregard, you were quite horrified. When you look at the 37% of earned income that's retained under universal credit, it actually means it's been very cleverly designed, because it actually means people get much the same award. It will usually cost slightly less than the legacy benefit system to the local authority as people move over, and this is because of that retention of earnings. So for the majority of earners, the higher earnings means less council tax support. And households not in work are unlikely to see any difference in support. As I said, households in work will often receive lower council tax support as they're receiving higher universal credit. This is really good news for local authorities, because it means the cost of support is met by central government rather than local government. But this doesn't negate the groups that are losing a lot under universal credit, because where the maximum you see is very different than legacy benefits. So, for example, we've taken out the disability premiums. We're using the minimum income floor for the self-employed. For those people, they will receive less universal credit, but also less council tax support. And I think we've got to be really aware of this, that for the majority of earners, the default scheme works well. But there are these pockets of people who will be hit by household income through other benefits, through universal credit, as well as reduced council tax support under the default scheme. A default scheme won't be cost neutral. There will be winners and losers, and how much it costs the local authority will come down to local demographics, and my colleague Juan will be going into that in quite a bit of detail later on. Okay, Janet.
Brilliant, thanks. So we do have Clive nearly joining us. So, but while we still wait for Clive to sort out the audio, Clive. Actually, sorry, Zoe. Clive, are you there now?
Hello. Can you hear me?
Ah, excellent. What a lovely voice.
Hi, Clive.
Oh, you would never believe the.
Thank you so much. Listen, excuse me while I scoot back to Clive's slides up here. Thank you so much, Clive. I'm very sorry for the audio problems that we've had, and apologies also to the attendees. So, Clive, if I can just jump straight in, if that's okay, and over
Absolutely.
to you to talk to us about Luton Borough Council's council tax schemes.
Yes, no problem at all. And apologies to everybody that's listening for my difficulties in getting in this morning. But I'm here now. That's all that counts. So for Luton, we have a £17 million budget deficit in our budget going forward next year, and clearly we're looking at ways to save money. That's to balance the books. That's the overriding driver. And our members are not wanting to cut support to the most vulnerable. So we needed to have some real intelligence about how not just the CTR scheme, but welfare reform in general was impacting on our residents. And the first thing that we were surprised about when we got the data from Policy and Practice, that couples with children, 362 households potentially, when universal credit was to come in, which comes in a week today, so very timely this call, we're going to be worse off. And in particular, it's the private tenants in work. There's 165 you can see there, households that are worse off. But in total, couples with children, 561, combined with lone parents, make up nearly half the population of our CTR scheme that are going to be worse under universal credit, or worse off under universal credit. And that was a big news for the members of the authority. And yes, we focused a lot on the disabled group, and which is the other half. But what you have to remember with the disabled group is that they are more fixed in their incomes because of their disabilities. So they tend to migrate over to universal credit at a slower rate than the in and out of work people and the working families who have changes in income as they do more and less hours. So it really was households with children that were a concern to our members, and this data drove that. So next slide, please, Janet. When you then start to look at the amount of money per week that these households are actually going to lose when they migrate to universal credit, if they lose their transitional protection, then again, couples without children had the biggest impact. The slide here with the colours red is the worst group, and you can see that couples without children. Now, our old scheme before we changed it in April took 25%. People had a minimum payment of 25%. So members, when they saw that, working and carers were, in particular, not in working carers, were going to be struggling. It really influenced members' decision not to actually take more minimum payment from the general household population. But for the families with children and the lone parents, again, there was a significant loss. £47.99 households with children would have an impact. And lone parents, £39.02 on average, would have a weekly impact loss when they migrate to universal credit. So these factors really meant that members decided that they really wanted to do more for households with children, if at all possible and affordable with our scheme. Okay, next slide, please, Janet. So when we looked at how much expenditure we were spending, and what was vital to us was to know our expenditure by group, there were two significant groups in the working age category, and this is data from our modelling tool from our system, that really drove our ability to possibly make changes and move money about. So you will see that the passported disabled and carer group, there is 3.8 million there in the top row on this slide, and you'll see the non-passported families, there's 3.3 million pounds worth of expenditure of the 10.2 million pounds worth of expenditure that we were spending on our CTR scheme. We spend in total about 15.3 million, but of course there is a good 5 million of that allocated to pensioners, and we don't have any choice about pensioners CTR. They're protected under the legislation with a similar scheme to the default council tax benefit scheme. So the real choice for members, if they were going to have any significant change was to actually give money to children and families. The major amount of expenditure was from the disabled and carer group, who under the old scheme could get 100% liability reduction and were contributing effectively nothing to local services. So they took the very difficult decision that perhaps disabled people should pay something, not as much as the normal working families, but should contribute at least something towards local services. And it was that welfare data that was provided by Policy and Practice and our expenditure figures that drove them to ask that difficult question in our consultation last year through the summer. Okay, next slide, please. So, what was the impact of the data? Well, as I've said, it convinced the members that a change, they wanted to do more for families, households with families, to protect households in the future as universal credit comes along. So we targeted our consultation at families and disabled. And if any of you have run a CTR consultation, you'll probably realise that take-up is quite low. So our targeted consultation, how we got families involved, was we actually ran a face painting day in the Mall in our local shopping centre to attract obviously youngsters during half term, during the summer holidays, and to get them along. And whilst the youngsters were having their faces painted, we asked the parents to complete the questionnaire. And if we're honest, that is where most of our consultation of families occurred, because they were like bees around a honeypot, really. The children insisted the parents waited to have their face painted. We had a long queue at one point. I was getting a bit embarrassed about our processing times to paint people's faces. But it was a very successful day. And the other thing we did to make sure we had enough correspondence from the disabled households was we mailed them all individually and asked them to follow the online link to the survey. But more importantly, we run a number of focus groups for disabled people only. And we got some good attendance and some good feedback. And what we found from that feedback was that they did feel that perhaps they should contribute to local services, and we're quite happy to have a small expenditure on council tax if we change the council tax reduction scheme. But our data, we still had to make sure that we cut the expenditure of the overall scheme, and we also didn't want to change the minimum payment of 25% liability because we knew that would affect our council tax collection rates as we've got information and data that told us that households really tend to give up trying to pay once the liability got to 25% or more. It had a real severe impact and would definitely cause hardship. So the other alternative to saving money, of course, is cutting the administration costs. And that we were also asked by members to look at. Next slide, please. So what are the alternatives in a CTR scheme? Well, we have gone down the automation route with our supplier. And if you're all asking who is our supplier, it is Capita. So we're on the old Academy system, as it used to be called, now called, I think, One Digital. And we have now got that live, and that is now for new claims, starting to have some benefit in cutting our staffing costs and resources spent on processing CTRS claims. But it's not the only solution in town by any means. We also have deployed the banded income scheme. So if your applicable income is above the, if your net income is above the applicable income amount, and you fall into, we have 7 bands, one of 7 bands. If your income increases or reduces more than the band, then obviously you'll get a change in CTR. Now that allows us to be quite progressive with our scheme. It also enables us to suppress council tax bills if you have a change but you don't change band. What it doesn't do, of course, is reduce the assessment complexity, which remains the same. So an alternative to banded income, of course, is to have a simple discount scheme. And this really, in principle, is good, but in practice is fraught with errors or dangers, because whilst you can have a simple award criteria, what can happen is you can have sudden jumps in liability unless you have many criteria for allocating a discount. So if you've got a criteria that perhaps in your scheme awards 25% minimum liability if you've got 2 children, and then if you've got 3 children, it drops to 15%. Obviously, if a household has an extra child, they change discount, and they may or may not be a winner or a loser. Likewise, if somebody suddenly has an accident and becomes out of work, if your discount scheme is over simple and doesn't have enough criteria, you can have these sudden jumps in income, which may impact some households quite severely. And so to make it fair, so there aren't significant winners and losers, the number of discount criteria you might require become quite complex. And finally, the other alternative, which we chose not to do, was to have a periodic assessment where effectively you only look at CTR claims once every 3-6 months. I wouldn't suggest 12 months, that's far too long. But you're only looking at changes in income over a periodic time, whether it be 3 or 6 months. The problem with that is, of course, whilst it does reduce assessments that you do, there are significant winners and losers during the period when their circumstances change, and you may have to account for that through council tax exceptional hardship or something, and that negates the savings in not doing assessments. And of course, when you do the reassessments, you will get peaks and troughs in your workload, which are difficult to manage. Next slide, thanks, Janet. Lovely. So the key to modelling any change, and I can't stress this enough, it was the policy and practice data and the impact on welfare reform as a whole, and not just our CTR scheme, that gave our members confidence to go out and suggest the unsuggestible normally, which is to perhaps ask disabled households for the first time to contribute a small amount, and it ended up at 10% minimum payment for disabled households. And that, when we introduced that revision this April, has not caused any issues or significant issues for any of the households as far as we're aware. We haven't had any particular concerns raised by our households with a disability. It is the policy and practice data that gave us the whole impact on welfare reform, and then having a valid modelling tool on your own system to look at the financial impact of any changes you're proposing is absolutely essential, and was essential for Luton, and gave us the confidence it would give us the savings we were looking for, which was about £400,000. So I think the next slide, please. Oh, lovely, thank you. So in conclusion, the main drivers for change for Luton was the grant reduction that we received this year, about a £300,000 grant reduction, and the fact that universal credit was coming, and we wanted to have our scheme in place before universal credit full service arrived, and so that drove the change this April. But there is no magic solution. Each area has different demographics, and so on the universal credit, for instance, if you have a high working population on universal credit, the impact will be less, and therefore modelling the impact is absolutely essential before you can decide what type of scheme to deploy. So any scheme has to be fit for purpose, therefore, and match your expenditure requirements, because we all have to set a balanced budget, and also provide the right support. Modelling is definitely the key. And if you're in the same environment that I'm working in, our members, certainly from a political point of view, don't want to reduce support anymore. They want to increase efficiencies, and likewise, they don't want to have increased council tax debt levels and causing more hardship out there in the wider community. Remember, sudden changes cause real hardship for households, and I do question whether it is now time to be lobbying government, central government, to change the pension age legislation on council tax reduction. And for us, a banded income scheme was one of the tools that has helped us reduce costs. And that's my bit. I hope that was useful for everybody.
Thank you very much, Clive. I certainly found that very, very interesting. And I know that, as I said at the very beginning, we've only got you for a short period of time, and we're running over a bit now. But I have one question, Clive, from the audience, if I may, before we lose you. But thank you very much for a very interesting session. The question is, how important was the involvement of elected members? Did they engage with the idea of scheme redesign?
Yes, they did, although I did propose a complete radical option, which they said not for now. They did influence, so one of the options we presented was an increase to that 25%, but when presented with the data, they were not keen at all, because of the data showing that the couples without children were heavily impacted. So they didn't really want to change the baseline for the people that were just couples or singles, just living households that were just living as is, because they are also impacted. So they wanted to leave that the same. And it was the data that changed and influenced members. But members were very, very, as you could imagine, we're a Labour authority. They were very engaged and very concerned about changing the scheme. So they had an absolute control and influence, and it was the members that made the true decision on what to do in the end when we presented various options.
Well, that's brilliant, Clive. Thank you so much. I think we'll leave it there, because I know that you do have to shoot off and we've taken more of your time. But thank you very much for your time today. And if any of the audience have any more questions for Clive, we will pass them on to Clive and we can answer them offline.
Lovely, thanks very much.
Thanks ever so much, Clive. Take care.
Okay, take care. Bye-bye.
Thank you. Bye. Excellent. Okay, so I think, Zoe, when we had originally talked, we need to recalibrate, I think, with our slide deck here. But really what we'd said right now was that we would go to a poll, and I think we'll still do that if that's okay. So the poll here that I'm going to serve now is, what would your main objective be if you were changing your council tax scheme? So just let me get that poll up for you now, and you should see that on your screen shortly. Okay, so I think you should be able to see the poll on your screen. So what the question is, as I say, I'll give you a few seconds to answer. So what would your main objective be if you were changing your CTR scheme? So the options that I can see everybody furiously voting for is it to reduce the cost of the scheme? For example, the cost of the benefit? Is it to reduce the administration costs for the authority? Reduce or avoid increasing arrears and cost of debt? Aligning the support with universal credit? Zoe started to talk about the impacts of universal credit earlier. Or is it to reduce poverty? And I know that many of you might like to choose more than one objective here, but I'm asking you just to choose just one, if I may. Okay, that's fantastic. I think we'll leave it there, because I think most people have voted. So let me close the poll and share the results. And so hopefully you should be able to see the results. Zoe, would you like to comment on those results?
Well, yeah, I think this is exactly with the second slide I showed, where the change from 1718 to 1819 in scheme design, that absolute reversal from tweaks to current schemes to looking at schemes where their core objective really is around saving admin costs, absolutely chimes with this. It's where, I mean, the majority of people have definitely, that's what's exciting. And that's exactly what we're finding where we're talking to local authorities and we're doing modelling for all sorts of different authorities, from tiny rural to large metropolitan. This seems to be the one issue that's exercising our minds. And the reducing cost of the scheme, that's interesting because it really has gone down. If we had asked this question a couple of years ago, that would have been up there, way and ahead the first one. And I think that most authorities are now realising they've reduced costs to the level that they're comfortable with or they've budgeted for, and that actually any further reduction in costs might well have an increase, an impact on arrears and cost of collection. And the impact of universal credit is obviously really exercising the minds about poverty amongst residents. So no, this is exactly what we've been finding when we've been discussing things with local authorities, Janet.
Perfect, excellent. Okay, that's always good to know. So let me hide the screen, and then I think what we'll do right now is we should be going back to the view. So Zoe, if I may, I'm going to just quickly, if you could redirect me to which slides you'd like to pick up with.
I think, Janet, we can move on to one section now, because we were looking at the national picture and how what's happening in welfare reform nationally and the impact of universal credit has an impact on scheme design. I think that Clive very, very neatly illustrated that, how that they, at Luton, they took into account that whole national picture of scheme design. But of course, the national picture isn't everything. And again, Clive was bringing this out about how the local demographics are important, and also the political makeup and the objectives of each particular local authority. So I think if we can go on to what Juan is going to cover, which is more at that local level and how the wider national picture impacts on local decision making.
Excellent, lovely, thank you. So without further ado, over to our third panelist, Juan Alvarez Vilanova. Over to you, Juan.
Hi, thanks, Janet. Hi, everyone. I'm Juan, and I'm a policy analyst here at Policy in Practice, and I work very closely with Zoe on modelling, a vast range of council tax reduction schemes. And yeah, I'll just talk to you a little bit more about, I guess, sort of the more technical side of things, so how we actually approach the modelling that we do, what our methodology is, and I'll also kind of talk about some of the more kind of interesting patterns that we've seen as we've done kind of modelling for so many authorities, and in total hundreds of different models. I'll just highlight some of the key learnings that we've seen so far. So the first thing to just go over, so the way we do the actual analysis is we use household level data sets. So I'm sure a lot of you will be familiar with the SHEBE, the single household benefit extract. So we use that, which is a very detailed sort of monthly record of the circumstances of low-income households. And we also use its counterpart data set for council tax reduction. And we put those two together, we clean them, and we are able to run them through our policy modelling engine, which is basically the same thing that powers a benefit and budgeting calculator, which hopefully some of you have heard of or even use. And that basically allows us to, for every individual household in a given area, to calculate what their council tax, what their CTR should be according to that authority's particular scheme, yeah, along with kind of what their benefit entitlements to other things should be as well. So universal credit being a main one. And yeah, so what that gives us is a picture of what expenditure in terms of CTR looks like across the whole local authority, but also being able to drill down into individual households. And then yeah, so that's the sort of the basis of how we start our modelling. And then once we've done that, what we can begin to do is tweak different things within the engine and start to see how that cost and how the impact on individuals and the CTR they receive would change if we either made small tweaks to the scheme or if we brought in a whole kind of different sort of scheme altogether. So an income banded scheme like was the case in Luton. Yeah, so one of the first things we do then is once we receive the data, we clean it and we run it through the engine. We like to kind of provide a scenario of what would happen if the local authority were to keep its scheme the same for a given year. So for 1920 or 2021, the first thing we look at is just uprating everything that would change anyway, apart from the scheme design itself. So what we tend to find is, yeah, for local authorities that have the default scheme in place or a small variation on the default scheme in place, this, what we call the current uprated scenario, can vary a lot depending on local demographics. So we've got here two examples of some analysis we've done for a London borough and from a more rural borough council with very different demographics. And when we do this stage of the analysis, we found that in the London borough, because there was a high percentage of people in employment, and in particular also people in self-employment, the impact of just maintaining the current kind of default scheme into the future was quite a significant reduction in cost, because there were so many individual households that were self-employed and employed that were losing support, just because that's what would happen naturally under the default scheme. So this council the analysis that we presented to them kind of showed that actually, yeah, sticking to the default scheme for them financially would make them a lot of savings because of the particular demographics they have. Whereas in this other more rural borough council, where the employment rate was much lower, sticking to the default scheme in terms of financials had very little impact. So there was only a very small reduction in cost, and in fact I think the cost we predicted would stay much in line with the predicted increase in council tax liability. So yeah, the point here is that for authorities with the default scheme still in place, which I think is still the vast majority of local authorities, the impact of not doing anything isn't neutral at all, and it will vary quite significantly depending on local demographics, and that's something we've seen consistently. So yeah, what I'll do next is, so I've already spoken a little bit about how we model this sort of do nothing scenario, and then I'll go through three other different types of models that we tend to do. So that's just making small tweaks to the scheme. So a few of you or so in the poll had making savings from your scheme as one of your key objectives, and making small tweaks to sort of make your scheme less generous is a way that could be done. I'll also then look at how we model income banded schemes, and then lastly a little bit on simple discount schemes, which are an even kind of simpler version of income banding, but without consideration for incomes. So this sort of do nothing approach, I've already spoken about it. So basically what we do once we call it matched your current scheme, and that we're certain our engine is awarding council tax reduction in the same way as you would, we look at how much CTR would be awarded at some point in the future under the same scheme. And the only things that we're changing then is things that would change anyway. So things like the council tax liability increasing, wider kind of changes in the economy or in the welfare system. So the national minimum wage going up and the personal tax allowance going up, which will impact how much income people have and therefore how much CTR they would be entitled to in the future. We can also factor in how much rents are predicted to increase in your area. And then, of course, the big one is we assume a rate of migration to universal credit, which is usually around 20% of the housing benefit caseload per annum. And that's based on figures we've seen in authorities that have been full service for a while. And yeah, so the thing that we tend to find here is that, yeah, the scenario, if you did nothing, varies quite significantly across local authorities depending on demographics. So I put here a table of a local authority where I think liability was going to be increased by 3.5% in the 2 following years. Yeah, so for pension age households, the cost increase would more or less reflect that. So the increase in cost for pension age households, for which you can't change anything, would be 7.6%. However, because as a lot of households, working age households, moved on to universal credit, many were employed and therefore losing. The total increase in cost for working age households, I've circled there, it was just 2%, so a lot lower than the predicted increase in council tax liability. Okay, thanks, Janet. So one of the very common types of schemes that we tend to do then is making small tweaks, usually with a view to making a small amount of savings from the council tax support scheme. So I've put here an example of some modelling we did a few months ago for a small district authority in the northwest, and they had a requirement from members to basically, actually in this case, it was actually making the scheme slightly more generous. Slightly reducing the minimum payment slightly. So they were interested in seeing how that could be done, but only through kind of small tweaks to the scheme, and not necessarily kind of vastly slashing the generosity of the scheme. So we looked at how introducing a capital limit, a band cap, changing the non-dependent deductions, and applying the minimum income floor across the board, what savings that would make and how that would translate in terms of how the minimum payment could be reduced. And we found that those 4 changes would allow this council to reduce their minimum payment, which was a set amount and not percentage, could be reduced from £3.50 to £3.22 per week. So that's an example of how we can model the impact or the potential savings that small tweaks could make. The next type of scheme that we almost always model nowadays is there is a lot of interest in how to design an income banded scheme for a particular local authority. So I'm sure most of you have kind of thought about this or seen these or even have one in place already at your local authority. But basically the way this works is it does away with means testing, largely under which is quite an appealing option now when a lot of local authorities are being faced with having to means test again and again as you see notifications keep flooding in. So this basically sorts households into different income bands, basically it sort of means that if a household's income changes, if that income change is such that a household doesn't cross into a different income band, then their entitlement to CTR stays the same, and there is no need to send out a new bill and incur those costs to the council and possibly generate quite a lot of confusion for the customer. So we can design a lot of different types of income banded schemes, factoring in protection for larger households, which tend to lose under income banded schemes in different ways. So through disregarding certain incomes that are associated with larger households, equivalizing incomes, or just introducing slightly different bands for single people and couples with children. And what we tend to do as well then is reverse engineer what the income bands would need to be in a particular local authority so as to keep costs the same in that particular authority, or so as to make a required level of savings. So it's not that we would just kind of copy and paste an existing income band scheme and its thresholds and just kind of apply them, because obviously it could end up being a lot more expensive or a lot cheaper than what a local authority was expecting. So if we just move on to discount schemes, so this is effectively an even more kind of stripped back and simplified version of an income discount scheme, in that this is where households are sorted into bands as well, but the bands aren't defined by income, they're actually defined by the household's circumstances. So I've put here an example of what this could look like. So this would be a scheme that would have 3 bands. The top one, the most generous band, would be for households on UC and not earning, so I guess the equivalent of households in receipt of passported benefits. And then there are 2 more bands for households that are earning below the work allowance, so with a small level of earning, so earning above the work allowance. And this has the benefit of being even simpler than adding up incomes, in that so when a UC notification comes through of an income change, most of the time unless that income change is such that somebody's income goes above or below their applicable work allowance, and there is no need to rebuild that household. And the actual assessment is very straightforward, because you just have to look at whether somebody's income is above or below a certain threshold. So it's a lot more straightforward in terms of the assessment process than adding up incomes and disregarding certain things. So it's basically an income banded scheme, but even very, very straightforward income bands. And again, we can reverse engineer what the discount levels would need to be in order to keep costs the same or at a particular level. Janet, if we could just move on. And then what we do for every different scheme or option that we model is, because we are using very detailed household level SHIVI data with a lot of different variables and information on households, we can see what the impact of each scheme would be on individual households or on different groups of households. So we can have a look at the what impact an income banded scheme or a simple discount scheme would be on different household types. So what if there's any particular negative impact on households with children or on a particular tenure type, and highlight that so that local authorities are aware of particular pockets or subgroups within the CTR population that would be impacted particularly negatively, and which members would need to be aware. And this is what Clive was referring to with the modelling that we did for Luton, that we actually highlighted that it would be couples with children that would be particularly affected by universal credit generally, and that would need to be taken into account in terms of defining the future council tax reduction scheme. So so we do we spend a lot of time on looking at the social and political impact, not just the financial impact. Very quickly, I'm aware that we're running out of time. I'll just breeze through some case studies. We'll send these slides across so you can read them in more detail. So kind of three kind of case studies or things that we've observed in the modelling that we do. The most probably important thing I could say is that one size does not fit all, especially in terms of income banded schemes. We've done modelling before where we have just cut and paste an existing income banded scheme from, say, South Gloucestershire, which was one of the pioneers of the income banded schemes, and the result is a much more kind of expensive scheme than what that authority was planning to, or that authority could afford. So yeah, it has to. You have to think about how that income banded scheme is going to be amended to both your local demographics and your current financial reality as an authority. Secondly, so Clive mentioned that simple discount schemes, they are very simple to administer, and there would be a reduction in admin costs. However, that they could potentially be cliff edges, as because the levels of discount could be so different that when that change happens, that could lead to a significant reduction in support. However, what I would like to stress is that it is possible to design these in such a way that those admin savings are delivered and it's still socially and politically fair. So I've put here an example of what that would look like, and I'll move on now, but you can kind of look into that in more detail. And thirdly, we've heard of a lot of district authorities who are looking at this as an opportunity to sort of align or realign schemes across a county council. And what I would say again is that whilst that's a very good thing to do, a lot of attention needs to be paid to ensuring that whatever scheme that ends up being, it's kind of tailored to the individual district and its particular demographics and how much they're spending and what their current scheme looks like. We did some modelling in the past where there was some surprises there in terms of what a county prescribed scheme would do, or the impact it would have. I'll leave it there. I don't know, Janet, whether we just want to move on to questions straight away. We only have a couple of minutes, really.
We do indeed, Juan, and you did very well to fit so much amazing information at such a canter. I do hope it wasn't too fast for people. As Juan says, there's more information on the slides which will be coming to you immediately afterwards. We have some questions come through, and I'd be grateful if yourself and or Zoe could take a look at these. So First up, can the IT systems we use administer a banded scheme? I think this is something that Clive did touch on, but just in case there's anything that either of you would like to also pick up on that.
Yeah, I would say the answer is yes. So I know of both Northgate and Capita sites for certain that have income banded schemes in operation. Civica and kind of the other kind of smaller ones, I imagine so as well, just because this is going to be a big sort of requirement for a lot of local authorities. But yes, the short answer is yes, and there are live income banded schemes and kind of different schemes generally that are being effectively administered through the existing IT systems.
Brilliant.
Could I just mention there, Juan, that the biggest problem seems to be around IT systems is not to do with the type of scheme, but it's incorporating two schemes. So having one scheme for your legacy benefit people, one for your universal credit people. I know some of the IT suppliers out there have incorporated that, others haven't. So if you're looking at having two schemes in tandem, one to go alongside universal credit, you might want to check with IT suppliers before modelling those.
Thank you, Zoe. This question here, I find that banded schemes create real cliff edges. Are you finding this, and what has been your solution when working with councils? So that's about banded schemes creating a cliff edge.
Yeah, I think
Okay,
there's no doubt that in some cases that there will always be, if you've got a banded scheme, people will be moving as they move up income, and certainly similarly with discount schemes, there will be a cliff edge. These can be designed to have these as little as you want. So you can have schemes that we design, if you're worried about cliff edges at the bottom, where those are very, very close bands at the bottom, wider at the top. So it's very, we can design out the really serious impacts of cliff edges.
Okay, thank you. And maybe this last question here for you, Juan. How quick, this looks like somebody who is looking to model for 2021, how quick can this be done, as we will need this for 2021, assuming this meaning modelling?
It can be done, it's usually within 4 to 6 weeks. Yeah, as I was saying, because we use Shibi data, which is standardized across local authorities, we've managed to automate the data cleaning and modeling process quite a lot. Yeah, so usually 4 to 6 weeks, and potentially a little bit sooner if it was just to give some preliminary findings.
Great, thank you. And I suppose there's the point there about needing to do the whole stakeholder management, and Clive gave experiences of what they did in Luton as well. Brilliant. I'm going to leave it there. Sorry.
If I'd just like to add to that, although the 4 to 6 weeks is a modelling to the results, we're finding that more and more local authorities, once they get the results, would actually like some further modelling or tweaks to the scheme. So I think people have to build that in, that actually the first stage of modelling will be to inform you of the results of where we thought the scheme was going. There might be some surprises, your members might have a reaction you don't expect. So it really needs to have time built in for further modelling beyond that, if it's necessary.
Very good point. Thank you, Zoe. And thank you, Juan, as well. And thank you very much to the audience members for joining us today. And also Clive as well for valiantly sticking with us and getting the audio working eventually. Just as you see here on this slide, the next steps that we would recommend for you right now, we really do value your feedback, and there's a very short survey at the end of the webinar. It's automatically served. So do please give us your feedback. Let us know what you think of today's webinar, whether we covered all the bases. And also, I suppose most importantly, if you've still got questions, that's your opportunity to put them into the survey and ask us, and we will get back to you. You can indeed, of course, request a closer look at any of our CTRS work. Juan talked about a number of case studies today. We're very happy, as long as we've got permissions from the clients involved, we're very happy to take you through some of the work we've done for other people and just basically have conversations. We love CTRS and we love talking about it. So do give us that opportunity. A big shout out, if I may, we've got some events lined up. It's a very busy period. If you're in the north and you're in Leeds next Tuesday, we would love to see you at our big Northern Voices event, which we're running in conjunction with Northern Housing Consortium. We've got an exclusive there with DWP. The DWP speakers, there's a managed migration event happening today, which is where Devon is at. And the speakers from there will be at the event in Leeds, and I'll be covering off that briefing in Leeds next week, as well as people from MHCLG and also housing associations and frontline practitioners, and we'll be talking about universal credit and tackling homelessness. And the point about that event is that we will be, the roundtable discussions will be collecting feedback so that we can write a white paper back to central government. So we'd love to see you there. Also, we have two events coming up, 2 more webinars, and again, you can ask us to register for these events in the survey. 14th of November's webinar is about universal credit, how our frontline advisors responding. We've got some great speakers lined up for you there, some brilliant guest speakers. And then in December, just before we break for Christmas, we're going to do a recap of the analysis that we've done this year. So social policy, what have we learned in 2018, and what does this mean for 2019? And we'd love to see you there as well. So without further ado, just one more thanks, if I may, to our guest speakers today, and thank you very much for joining us today. You can contact Juan and Zoe on their email addresses here, and indeed call us on the phone there. Without further ado, I'll leave you there. Thank you very much, everybody. Thanks for joining. Bye-bye.